Good morning, Facebook world. This is Jim and Dana for episode 10 of Keeping It Real Estate. And this is a fun topic. It's one that we're going to do our best to keep short, but it can go a long way. What intimidates and scares everybody, financing a real estate transaction, what to know and what not to know.
Everybody hates it.
Yes. So Dana, what would you say is the number one myth about the real estate financing process?
The number one myth?
See, I always put Dana on the spot. We do nothing ahead of time. So
no, we don't talk about anything.
No.
It just
if we're
comes
lucky,
out
we
from
remembered what our topic was. So
the left field.
Yeah.
That's how we roll. The number one, I don't know, what would be the number one myth?
I would say the number one myth that still perpetuates is that you need 20% down to buy a house.
Oh, see, Jim, I never know what you're talking about when you come up.
I know.
I don't know if that would be a number. You know what, Jim? It's been so long. I don't even know with this new generation that is a myth anymore. The rates have been down for so long, and it's been so long since you've had to put 20% down. I don't know if a lot of people even know what that is.
Okay.
I mean, they do, but.
All right.
Yes, you're probably right, though. You know what? Because people get it from their parents. Because parents remember back in the 80s and the early 90s, when the interest rates were really, really high, and you had on 20%.
I would tell you another one is that you need perfect credit.
Yes.
I bet in a lot of ways, I think it's probably easier to buy a house under the right circumstances than it is to get a credit card. So
just a little bit scary.
Yep.
Yeah, for sure.
So, but let's so Dana, you want to discuss what the three primary ways of financing are?
You mean like the different kind of financing?
Yes, sir.
So you can do FHA, you can do conventional financing, you can do VA. And
okay,
you can do
how
cash,
are they all different?
Which is not financing. So conventional financing is a little bit different than FHA and VA. FHA and VA are government insured loans. And I think their qualification probably you need a little bit less money to do the VA and the FHA. FHA requires 3.5% down, and conventional typically is 5% down, although there are a few lenders out there that have a couple of different products where you can go in as low as 3% down on conventional. And then VA, of course, most VA loans are 100% financed, although you can do whatever you want. That's a mixed bag, but you can get away with $0.
What's the big stipulation on VA?
What's the what?
The big stipulation, the big condition. It's not available to everybody.
Well, you have to be a veteran.
Right.
Yeah. Sorry. Yeah. You have to be a veteran, armed forces, retired, whatever. You have to have served.
You have to be honorably discharged, active, or retired. And you can only have it in use at one at a time.
One at a time.
Yeah. And what we see
there's
lots
different
of times,
fees associated too for first time use and then subsequent uses as well. So that's something pay attention to as well. Because the fee is, it's higher on subsequent uses than it is. There's a funding fee that they charge you use that kind of loan, and it's cheaper on the first go around, and then second, third, fourth, fifth, however many more times you use it, it's a higher rate.
Right. And one of the things we see a lot is people are that are in the military. They buy a house when they're in North Carolina, and they keep that as a rental, and they come here and they want to use their VA again, and they can't because it's tied up with the property in North Carolina. So like everything we talk about, this is a big puzzle piece. And, there's like my dad's favorite saying used to be, there's a butt for every chair. Yeah. So kind of however you're wired, or, whatever your circumstances are, there's a loan program out there. But again, a couple of things I just want to make very, very clear. Number one, don't try to fix your credit. If you think you got some issues with your credit, talk to us. We'll put you in touch with a good lender. They have some incredible software these days where they can basically put your credit scenario into a computer program, and it'll tell you what you need to do to bring your score up, and then how much they can bring your score up. So, if you are sitting at 628 and they need a 640 for the loan program, they can tell you exactly what you need to do to get those 12 points. So, because inevitably, trying to do it on your own, you're going to do the wrong thing. You're going to do something that might make your situation worse. And it's very counterintuitive. It's amazing, actually, some of the things that you would think would help don't, and things that you wouldn't think would help do.
And I can tell you from experience, as Jim knows, but as a lot of people know, I deal with a lot of first-time home buyers, and probably one of the biggest mistakes they make is they say, oh, well, I need to fix some things on my credit. I need to pay down some credit cards and all that kind of stuff. But like I was saying, it's the first thing I do is say, well, before you do anything, before you pay down anything, talk to my lender, because they can direct you what makes more sense. Down, whether it's the car loan that you owe $3,000 on or a credit card that you owe $3,000 on, one's going to have a larger impact on your credit score than the other one. Like Jim was saying, talk to us first so we can the lender.
Yeah, and something else that we hear all the time is people say, well, how much money do I need to buy? And so let's just use an FHA scenario. Dana, like, how much money would you need on a $300,000 deal between down payment and closing, approximately?
Well, in this market, which is a hugely seller's market where they're not giving out closing help, you're going to need, call it $20,000.
Okay. So how does that break down?
So you're going to need your 3.5% for down payment, 3.5% of whatever the sales price is, and then you're also going to need closing costs. You're going to need money for closing costs, and that's going to run you approximately anywhere from 3.25% to 3.75%.
Yeah, you can kind of make it nice and neat and say they're both about 3.5% in Anne Arundel County. Yeah. So that's $21,000. So, just what Dana said. Again, like Dana said, in a different market, we've been able to get the seller to pay that, but in this market, no. So that means if you're a first-time home buyer, that means you got to go to your parents. Oh, and this is very important. FHA and VA and conventional in certain circumstances will allow gift funds. Yeah. So you can get money from your parents, you can borrow money from your 401k, your church can give you money. Because the thing that's really crazy, especially the way the market is right now, every day you wait and every house you miss, the prices are going up. Like if you're looking at a particular townhouse community, the last one's going to sell for $5,000 more than the previous one that sold. And so if you say, I got to wait 6 months to scrape up the money, I mean, you could be looking at $15,000, $20,000, $30,000 difference in the price. So, that's one of those times where if mommy and daddy are willing to help you, it might be a good time to have that discussion. But just figure on a $300,000 house, you're going to need, and just figure in general, you're going to need 7% of whatever the purchase price is that's the cost of entry to get in the door in the house.
Yeah.
So, and then if you go conventional, generally speaking, the ideal scenario is to put 20% down. You take mortgage insurance and second loans completely off the table. But people aren't always in a position to do that. And so if you have really good credit, good income, we have lots of creative scenarios where people are buying their new house without selling their old house. But talk to us, because we have some neat programs where you can get a first loan the size that you eventually want it to be. And the second loan, where basically you're borrowing the money that you're going to pay back when you sell your house. So let's say you have $200,000 worth of equity in your house. You're buying a $400,000 house. So you put 5% down on the $400,000 house. So you have a $380,000 mortgage, and you get a $180,000 first mortgage because that's what you want to end up with. And you get a $200,000 second. And then when you sell your old house, you take that $200,000 worth of equity and you pay off that equity line. And what I love about that, for people like us that are in commission sales, you have a line of credit available to you that's open and available. And even if you just pay it down, the payment is based on the amount that you have out on the line of credit at the moment. So if you pay it down to $20,000, you're only paying interest on $20,000 as opposed to the $200,000 that you originally borrowed. So that's very kind of archaic, but I do want you to know that there's lots of options. And as our common refrain, picking the right agent who works with the right lenders is super important. And there's a lot of ways. So I was looking at our board the other day, and we have 21 listings and 19 are under contract right now. So everything is going super fast, and we have 22 buyers under contract. And I just know anecdotally that we're getting a lot more houses accepted than than most realtors out here. It's a real struggle, and you know, we're fighting the fight too. But you know, there's a lot of little tricks to the trade, and financing is huge. You know, positioning your offer in the right way and making it look attractive, and making sure that the seller knows that, you know, you are working with a competent lender. A local lender is super important right now, because how many deals make it to their deadline, Dana?
Well, with the right lender, all of them. With the wrong
But how
lender,
many? Yeah.
lots of them
So how
fall
many are
out.
we seeing? So how many are
Lots
we
of them
seeing that
fall
we
out.
don't are in control of?
Yeah, that's right. The ones you have
Tons of them.
control over, the ones that make it, the ones that,
Right.
you know, if you need to rattle some cages, you can make that happen. But if it's a lender that's out in Utah, good luck. You're not gonna, you know, you're not gonna have that inside line, you know, to make things happen. So, you know, that's a huge part of it. And agents aren't dumb. So, I mean, you know, the listing agents that are out there, you know, they know that. And when you see a letter come in, especially if you're competing with 3 or 4 or 5 other different deals, and you've got a couple of letters out here that are from loans, or, you know, lender out in Utah, and you've got somebody that's in Millersville, or a lender that's in Severna Park or something, you know, that makes a huge difference. Makes an enormous difference. So, yeah. Would you agree?
Totally agree. Let's see. What would you say, Dana, for what's your outlook for interest rates right now?
At least according to the Feds, they're going to remain low, because they're trying to, you know, they're trying to encourage, you know, continued home sales. So as of right now, it looks like they're going to remain low for probably the balance of the year. They took a little uptick last week or 2 weeks ago, but then they've settled back down. So I guess right now, for the next foreseeable future, it looks like they're
What's low? What are the rates bouncing around at right now?
2.25, 2 3/4 to 3%.
Okay, so
depending on what kind of loan you're getting and all that, you know, and obviously, you know, it depends on what your credit score is as to, you know, what kind of interest you're going to get as well.
Yeah. So, but just keep in mind, folks, we are in absolutely uncharted territory on so many fronts. You know, the United States economy, the world economy, you know, real estate market is crazy. So for anybody to say that they can predict with confidence what's going to happen in the next year is crazy. So what I've been telling people is that interest rates only have one place to go. They are so impossibly low right now that, you know, they're going to find a way to creep up here. Now, whether it's, you know, the next 6 months, a year, 2 years, I don't know. But just know that, you know, don't wait for them to go any lower, because that's not going to happen. They're at the bottom. And then one other thing that I think is important to know, we talked about, so if you know in your head, and it's, you know, if you can think about it, write this down, but you'll need 7% to do an FHA deal. If you're doing a conventional deal and you're trying to look for minimum, figure you're going to need 8.5%. And with VA, you're going to need 3.5%, because basically you just need your closing help. But and then closing, just so you know, those are a variety of, it's prepaid taxes, insurance, lender fees, title insurance, notary. There's, you know, all the little fees that go in with that make up buying a house. But cumulatively, they come out to about 3.5%, and they are like death and taxes. You know, you're going to pay them. Right. So, and then one other thing that I would tell you to keep in mind is when you are thinking about what a mortgage looks like, figure about $5 right now, and that's with everything tagged, or taxes and insurance and everything, about $5 for every $1,000 you finance. So if you were looking at a $400,000 house and you were going to finance the whole thing, figure you're going to have roughly a $2,000 mortgage. So, but that's good when you're driving around and you go, okay, well, you know, that house is $300,000. I don't know if we can afford it. Figure it's going to be roughly $1,500 a month.
No.
So, and then, go ahead.
I was just going to say that number changes, you know, as interest rates go up, you know, that number might go to 5.25, 5.5, $6, you know, $6 every thousand. And as interest rates go down, that number, you know, lowers as well. And it's a good ballpark. And it's, you know, we call it all the time caveman math, but it just gives you, like you said, a great idea.
Yeah. It's
you're not going to be shocked and surprised.
Right. So. And then one other thing that I think is important to know when it comes, like, am constantly amazed at how much people get qualified for. So,
Yes.
they, so in most instances, you will be approved for way, way more than you would ever feel comfortable having a mortgage. And people like, well, I don't understand. Well, I got a cable bill and I got this and that. But for your qualification purposes, with FHA, they have a FHA and VA, they use this thing, it's a desktop underwriter. So basically they put your scenario in to the computer, and the computer gives you an approve or decline based on the information that you plopped in there. So, those, for the most part, with FHA and VA, they'll let you go to around 50% of, it's called the back ratio, which means that of your gross income. So if you make $6,000 a month, they'll let all of your bills, but only the bills that you have a recurring monthly payment on. So car payment, your minimum monthly credit card payment, your new mortgage, but just the bare minimum stuff up to $3,000 a month. So, but for most of us, if you figure that taxes are going to get you down to $4,000 a month before you've paid for one drop of gas, any food, anything, you're already, you've only got $1,000 a month left. So you got to be a little bit aware of where your comfort level is on that. But anyway, that's just a good rule of thumb too. So, but again, talk to us, and don't ever, it's the worst thing in the world to go look at houses before you've talked to a lender and gotten qualified, because you're going to be disappointed in one direction or the other. So
I concur.
Anything you want to add to that, Dana?
No, I mean, I think that pretty much sums it up. I mean, just don't hide. That's all. Get with us before you start doing anything, and let us run the scenario, let our lenders run the scenario, and then you know exactly what you're looking for. And it's much easier to shop that way. It's like Jim was saying, it's a huge insult to look at, whatever. It doesn't really matter what it is that you're looking for, whether it's a $500,000 house or a $300,000 house. When you realize that you can afford $100,000 less than what you've been looking at, it's going to be insulting. It's going to make it real hard.
It's tough to swallow, for sure.
It is.
Yeah. So quick update on Florida. Things are going really well. We picked up 2 listings last week in Florida, and we're busy showing houses, and got some good momentum down there. And so Southwest Florida, the Gulf Coast is beautiful. If you decide you want to get a change of scenery, give us a call. I think most of you probably know I am under contract on a house down there, so we're excited. We settle at the end of the month, and so looking forward to seeing where all that goes. So and of course, we're still here to help you. Go Maryland, and going to be forever. So and the market continues to be robust. We put 3 or 4 listings on the market this weekend, and I think they're all under contract, and multiple offers on everything we're putting out there over list. So market's great, continues to be so. But if you're thinking about it, I would say, with all the uncertainty in the world these days, and with COVID loosening up, I'd get your house on the market sooner than later. So, all right, I think that's all we got. So we'll see you next Tuesday, and hope you have a great day.
See you, everyone.